Little red at this juncture for the Sensex and the Nifty, and a little redder for the Nifty Bank.
As we speak, the Nifty slipped a bit in the last 15 minutes, but midcaps continue to rally, and as you can see, virtually at the high point of the day.
We're up 73 points odd on the Nifty, 14,561.
It's green across the screen with the market off the morning lows.
Once again, bulls in complete control, and the bears have been decimated. The Nifty is up another 87 points.
Markets recover from lows to end at record highs. Nifty and Sensex end 0.5% higher. Financials, auto stocks lead the markets.
Tata Motors soars 10% on strong Jaguar Land Rover sales in the third quarter. Bharti Airtel leads the Nifty higher after HSBC raises the target price in the stock. GAIL also joins the party on news of share buyback from the company.
A late surge in PSU banks saw that index end 6% higher. This after reports that the government is planning to set up a bank investment company in the budget. SBI, PNB and Bank of Baroda rally between 3 and 10%.
Midcaps are the toast of the day. Index gains over 0.5% to end at record highs. The index was led by real estate stocks, which ended sharply higher. Tata Chemicals was one name which rallied, as it is an advanced stocks to acquire the industrial salt unit of Archean Group.
After TCS, Infosys and Wipro are expected to come out with a strong third quarter number tomorrow. This on a ramp up of deal wins and expectations that Infosys will up its full year revenue guidance. Those were the top 5 headlines from Dalal Street on a day when the bulls absolutely took your breath away. My bet is that the bulls themselves were surprised by today's rally, because we didn't start that way at all. We started with perhaps a bit of somberness from the global markets. Welcome to Markets Today, the show where we will tell you all that happened in those 6 absolutely exciting hours of trading in 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant, what a day, yaar.
90 points, Lata, once again, right? So
it was those landmarks, 14,500, 49,500 on the Sensex.
So, yeah, I mean, 15,000 and 50,000 are not very far
yeah,
away, right?
Absolutely. A day away, maybe.
A day away. Well, we will talk about all of that. I mean, the move has just been absolutely stellar. We'll tell you what happened. We'll get you the opinion. Nitin Bhasin of Ambit Capital on markets. Ashwini Agarwal of Ashmore Investment Management also on markets. That's essentially the top market views here on the show. But before we get to that, let's quickly tell you what happened, blow by blow account of the last 6 odd hours of trade. Lata.
Well, the bulls were on a rampage. They were the rage of the day. It didn't start that way, as I told you. We actually had global adverse problems or adverse parameters to tackle. The Wall Street handover was weak. There was a fairly deep cut on the Nasdaq, and big stocks like Tesla had fallen like 8%. Cryptos were down and out, seeing sharp cuts. And Asia was kind of middling. Asia was not lower, but not all that great either. And the financial stability report of the Reserve Bank, which came overnight, was actually pointing to more distress in the banking space. So given all that, nobody would have tossed a coin and said that today would be a day that would belong to the bulls. But such is the money power. So much is the money coming in each day, 3,000, 6,000 crores, that, you can't talk logic. Today, actually, if you want to make a pattern, and I'll leave you to fill in the details, it was the slightly weaker stocks, or the stocks that have not so far performed, that came out and performed. Tata Motors, of course, for the second day running, but more generally auto stocks, PSU stocks, a lot of them are NTPC, ONGC, Variety, GAIL, each for different reasons. PSU banks, of course. So it was the value part of the market which moved up, and the strong boys like, say, Kotak Mahindra Bank, or even for that matter HDFC Bank, which moved 2% but still was not anything compared to the 9% of Bank of Baroda. The strong boys, Asian Paints, they were the ones who just paused, sat back and watched the fun, so to speak. But you tell us all that stood out for you.
So just filling in what you said in terms of stocks, Lata. So PSU Banks, top of the list, 5% gains on the index. Real estate index was up strongly, and the energy part of the market moved as well. And that, I think, is thanks to Reliance finally starting to move. Pharma and FMCG were lower. I mean, there's basically some pockets of weakness. Nifty gains. Tata Motors continues to surge. Not at the day's high, but, well, 8%. It's moved almost, 20% in the last 3 sessions now. Aisha was up about 3 3/4. GAIL was up about 4 1/4%. It was up from in the morning, the word go, even as the market was a little all over the place right at start. Coal India, Reliance is for the first time in many, many weeks shown some action. And I mean, 3%, and it can do a lot to the index by the sheer weight. IOC about 2% higher. Then there was Hero, Bharti and HDFC Bank, which were the other large, sort of meaningful Nifty gainers. Losses, as you said, in the more settled, the leaders really in their sectors. Asian Paints was down, HUL was down, Nestle was down, Titan was down, Kotak Bank was lower as well. So this was where there was a little bit of pullback. The broader gains, market breadth was positive, unlike yesterday. DLF continues to do very, very well, 267. It's having a great start to this year. Bosch was up 5%. Tata Chemicals, will tell you more about what happened, 4.5 higher there. And then you come to this whole list of PSU names: Canara Bank, Bank of Baroda, Indian Bank, Bank of India, Union Bank, all up between 4 to 10%. This pack. The private sector space, IDFC First Bank saw strong gains, large volumes. Karnataka Bank was higher sharply. CESC, I mean, there is a board meet tomorrow, 662. Big volumes on CESC today. And there was JSW Energy and Tata Coffee, which were up and about with large volumes as well. Lata.
Okay. Well, thanks for all those details. We'll get your opinion now from the experts we spoke with. We were joined by Nitin Bhasin of Ambit Capital and Ashwini Agarwal of Ashmore Investment Management. We mostly asked them the same thing. I mean, how do you trade when markets are at such frenzied highs? Listening to what they had to say, and more importantly, their sectoral bets.
Have to be actually start looking at in terms of growth expectations. So hence, I would still maintain that metals, one should be remaining overweight for the next 6 to 12 months. One should be remaining overweight on pharma.
I didn't expect the kind of strength that we've seen in the market of late. Going into 2021, therefore, one has to be a little bit looking over one's shoulder to figure out, what can go wrong. On the face of it, if you think about it, liquidity remains very constructive. There have been regulatory changes pertaining to real estate, for example, which are very good for the recovery of this business in a state like Maharashtra. The RBI has said that it will keep rates low for as long as it takes for recovery to take hold. My sense is that if rates remain low, if policy remains constructive, you might have a situation where economic growth continues to pick up from here. The IT valuations on a historical basis are starting to look stretched, but the commentary from TCS indicates that we might be in for very strong earnings momentum in the short run, and the commentary is consistent with what we are hearing from other IT services companies. So if you put all that together, then it might still be too early to call the top on IT services. So that's another area for you. We continue to be very positively positioned and positively disposed towards pharmaceutical stocks, which bottomed out in 2018, 2019. And 2019 was an okay year, but 2020 was a very constructive year for them. I still think there's more room for upside there.
Okay, so that's views on markets and sectors. To the second headline then, Tata Motors zoomed 10%, actually 13% at one point, ended about 8% higher after its third quarter. Jaguar Land Rover sales beat street expectations. China sales led the way. China, by the way, is about 25% of JLR sales volumes. My colleague Sonia is here with the fine print of the numbers there. Sonia.
Oh, absolutely. So Tata Motors is rising on the back of very strong JLR numbers on a sequential basis. So this is the second straight quarter of a pickup in JLR numbers. The volumes, that is, have gone up 13% on a quarter-on-quarter basis. China has been the strongest performance both year-on-year and quarter-on-quarter. China sales are up by almost 20%, but the other markets are not too far behind. North American market went up 31.7% quarter-on-quarter. Europe went up 20% quarter-on-quarter. And for calendar year 2020, though, the JLR retail sales were down about 23.6%. CLSA put out a note where they maintain a buy. They have a target price of 270. They continue to forecast a sequential volume recovery for JLR. The China market is very strong. Land Rover has been doing very well, driven by the Defender, the Range Rover and the Range Rover Sport. And they say that cost rationalization should drive a strong free cash flow generation. But I just want to put 2 points of caution on the table. One is that the valuations have now become very expensive for Tata Motors compared to its global peers and compared to its own historic valuations. So Tata Motors, as we speak, is trading at 4.3 times FY22 EV to EBITDA, compared to global peers like Daimler and BMW trading at around 2.5 times. So that's one bit of caution. Two is that post Q3 is when we saw the strictest lockdown in some of the key markets like UK and Europe for Tata Motors, and that could have an impact in the Q4 volumes as well. So that's something to keep in your mind. But I don't think the market is paying any heed to any of this caution. The stock is running away on the back of good numbers.
Okay, well, you have your say, Sonia, but I would still think that, you're not giving due credit to the China market, which Prashant was alluding to. And the fact that, the UK market is not the only market for Tata Motors. To compare it with Daimler, I think is a bit of a stretch. It's got a large CV portfolio here, a passenger vehicle portfolio in India, and it has a large portfolio in China. And these are growth economies. They are not somnolent economies like Europe is at this point in time. So maybe I would give the benefit of doubt to a company like Tata Motors. But there are more stocks on your radar.
Oh, absolutely, Lata. Bharti Airtel was the other one. It gained over 3% after HSBC gave a positive outlook for the company and raised their price target on the name. Rima is here with details of what HSBC said. The stock ending at the day's high. Rima.
Thanks so much for that. Yes, HSBC has come out with a report. It's a buy call on Bharti Airtel. They've raised the target price to 670, and the key reason is they expect an improvement in the average revenue per user, or ARPU, and this will be driven by potential price increases and, secondly, on account of migration of 2G subscribers to high-value 4G subscribers. But since spectrum auctions are also on the anvil, they will be starting on 1st of March, I just want to put on board HSBC's view on spectrum auctions, and there they do not expect overzealous bidding by any of the operators. So on the whole, they expect the industry to bid for spectrum worth 25,600 crore rupees, which is paltry compared to the total spectrum which is on offer, which is 3.92 lakh crore. And the key reason for that is, one, there is abundant spectrum which is going to be put up for auction. Secondly, the 700 megahertz is very expensive, so they expect the industry to give it a pass and not bid for it. And thirdly, in the last few years, telcos have been bulking up on their spectrum via sharing, mergers and acquisitions, which is why they don't expect them to necessarily bid for the entire amount which is going to expire. So that's the reason why they're expecting the industry to bid only for 25,600, and Bharti in particular will be bidding for less than 10,000 crore rupees. So at least that, that spectrum, overbidding in spectrum auction, a risk that we had in 2013, etc., is unlikely to be there this time around. Back to you.
All right, that's well argued, Rima. We are going to call you back later on in the show. But for the moment, I'm turning to another Nifty stock, which is GAIL. That stock surged more than 4% after the company said it will consider a share buyback and an interim dividend at its board meeting on Jan 15th. Sonal Bhutra is joining with an analysis of this news. Sonal.
Well, GAIL is excited in trade. That is because the company on the 15th of January will be discussing a buyback and will also consider a dividend. Just to give you some financials, well, the net worth of the company is around 43,432 crore rupees as in September. And if we go by the formula, 10% of that number as per board approval would mean around 4,300 crores. That is the maximum limit at which the company can do a buyback. At 25%, it will be around 10,800 crore rupees. But if we look at the balance sheet, The cash, the bank and the small term investments, they are around 1600 crores. So the buyback going by that could be limited just to 3 to 4% of the overall net worth at around 1600 crore rupees. So that is something we'll be watching out for. But apart from that, even the fundamentals for GAIL are very strong right now. Spot LNG prices yesterday hit a record high level yet again, which is positive for GAIL. Higher crude prices also bode well for the company, and also move towards gas economy, something that could be potentially a very big positive, and that is what UBS says, that they are seeing that people are moving from fuel oils to gas, and they are at the cusp of moving, the economy is at the cusp of moving there. So gas utilities should benefit from higher gas demand, and that's why they're raising GAIL's target price from 140 to 160 rupees per share. But not only that, for the city gas distribution companies, the CNG stations have reached around 230 cities. That means gas will be available in more areas. That would mean higher volume growth for IGL and MGL, and that is why they have double upgraded IGL to a buy from a sell. They have also increased the target price for MGL as well. It's an upgrade from a neutral to buy. All these stocks doing well in trade today.
Sonal, thanks very much for that. Well, let's move on to the third headline then. A late surge in public sector banks saw their index end 6% higher. This on reports that the government is planning to set up a banking investment company. SBI, PNB, Bank of Baroda, Bank of India, Indian Bank, all rallying anything between 3 and 10%. This is, you know, the less loved part of the market, Lata. But when it moves as a pack. And usually there is some news flow. I mean,
yeah, you can
horizon.
delude yourself that it is a bank investment company, etc., etc. But when there is so much money, it looks for very cheap stocks. So I'm going to first begin with that argument, the money argument.
Yeah.
Look how cheap they are. And I'm giving you these valuations, the price to book of these stocks, FY22 book. I mean, assuming we know how to read the book, because it is a moving book value. The SBI stock at 292 rupees, today's closing price, is trading at 0.7 times today's price. BOB, after a 10% rally today, so taking it to 79 rupees, is trading at 0.5 times, 0.5%. You know, before the rally, it was at 0.4 times book. Union, today 33 rupees, is still trading at about 0.3 times book. PNB at 36 rupees today is still trading at half time book. And Bank of India at 53.90 today is still trading 0.4 times book. I mean, they are as cheap can get. And if realty is doing well, and if industrials are doing well, and there is a commodity boom, these are the guys to whom the banks have lent. So, you know, there the list comes up for you. If it's as cheap as this and all the underlying sectors are recovering, then it's time you bought the lenders. So that's what the market did today. You know, I can give you an equally strong set of reasons if they had fallen. And that would have started with what the Reserve Bank said. The Reserve Bank, in its financial stability report, said that PSU banks alone, in a base case, are going to see their NPAs rise from 9.7% in the last reported quarter, September 2020, to 16% come next September, that is September 2021. In spite of it, if there is a rally, it's quite clear that you know, markets are willing to believe that the government will do something in the interregnum when you know that things are getting bad. Hence, there is some credibility to this expectation that in the budget, a bank investment company will be floated. That company will hold all the shares of these banks, and that company will raise money, and then some divestment, some board independence, all that can result. So that explains the rally for now, but all this is post-facto rationalization. On that note, I'm going to take a break, but we have lots more interesting stories for you. Stay right there. We are coming back in a jiffy.